What if I told you that betting on the NFL is just like trading a stock? So my name's Alex Monahan. If you're new to this channel, I actually started my career as a quantitative trader. Trading is basically just gambling in financial markets. I was a derivatives trader at Susquehanna, which is one of the top most successful trading firms. But then I realized sports has always been my passion.
Oh my God! Holy sh!
So I kind of got back into sports betting, started to take it really seriously. And at this point, I've been betting on sports for about 7 years now, very seriously, and I've made over $770,000. Of that profit, only $170,000 is on the NFL specifically. I will bet on any sport, right? Like if there's value in the NBA, I'll bet on the NBA. Obviously, in this video, I'm going to focus on NFL betting strategies because NFL is very unique compared to other sports. I'm up over $30,000 lifetime betting on tennis, and I don't think I've ever watched a tennis match. You can make money using trading strategies for any sport. Similarly, I use multiple sports books, right? Like you can see here is my profit by sportsbook. Since I started very seriously gambling, I have used dozens of sports books. And that's for a very intentional reason. The market is extremely fragmented, extremely inefficient, with all books setting their own unique prices. So I'll give you an example, is if you want to bet on the Texans this week in the NFL, if you're betting them at minus 142 on rebet, you don't stand a chance at making money. There are a variety of other sports books that are offering much better odds, like minus 117. You know, it's kind of like being a trader, and if the market were so fragmented and so inefficient, granted it's not, that you decided to buy a stock at $142 on E-Trade as opposed to buying it at $117 on Fidelity. It doesn't make any sense. So as a sports bettor, the most important thing is having multiple sports books because you never know which book is going to be offering the best prices, the best value on a given day. So in this tutorial, I'm going to show you how NFL betting is exactly like trading stocks as a quantitative trader. And the point of this video is also I'm going to give you actionable strategies that you can use, anybody can use. If you're not lazy, you learn the math, you will be able to use these strategies to consistently beat the sports books. So without further ado, let's get into it. So let's start out with market dynamics, right? The stock market is the combination of all investors and traders, and asset prices, stock prices are constantly changing due to a bunch of different things, right? It could be current events.
Looks like an abort was called at T0. The team will look into the issue and we will hopefully make another attempt.
Look at the stop.
Again, abort called right near T0. Teams are currently working through their abort procedures.
Similarly, if you take a specific company like Apple, if they absolutely crush their earnings, they make way more money than the market was expecting, the stock is going to jump. That is going to be almost instantaneously priced into the market. So it's going to be reflected in the stock price that, hey, Apple's making way more money than expected, the company's more valuable. Stock prices also change just due to trading volume, supply and demand. If every hedge fund thinks a specific stock, even if it's smaller, is a buy, and they're just loading up on it and demand way outweighs supply, the stock price is going to go up, right? The market reflects all orders in the market. So essentially, the fair price of a stock is basically just where buying and selling are equal. So that's basically the stock market. So what about for sports betting? It's the same thing in sports betting. Odds are always changing. So I'll give you an example. You can see a line movement chart here for the Ravens-Texans game. The Ravens were unsurprisingly pretty big favorites against the Texans. And then Lamar got injured. And then it was, the market was unsure. Is Lamar going to play? Is he not going to play? So lines moved towards the Texans. Now Lamar Jackson is out, and the Texans are favored in the game. They're minus 120 favorites. So sports books are constantly adjusting odds due to injuries, weather, things like that, as well as just sharp action, betting volume from profitable customers. So I'll give you a simple example is for Thursday Night Football, Puka's rushing yards line is at 3.5 on FanDuel. So let's say every single sharp, profitable customer, FanDuel's not stupid, they know what customers are up money on them. Let's say every sharp, profitable customer hammers Puka's over. Everyone's just betting the over. What do you think FanDuel's going to do? FanDuel's not stupid, right? They're going to take the line higher to 5.5, and then 6.5, and then 7.5, and then 10.5. Sportsbooks are always reacting to betting volume, especially when it's from sharp, profitable customers they've flagged as people who have made money off of them. And it was the same thing when I was a trader, right? If there was a really smart hedge fund who consistently made money, who was coming into the market to make a trade, they want to buy something, your first reaction as a trader is, hey, maybe I have this price too low. Maybe the price isn't $15 and it should actually be $17. So you're using order flows, right? You're using trading volume essentially to guide how you price things in the market. If you have something priced at $20 and everyone wants to sell it to you, right? You probably have it priced too high. It's probably worth $18 or $17. The market in general is pretty smart because, again, it's millions of traders, right? There are literally millions of people who wake up every single day and their sole job is to research Apple, run computer models, do all this complex stuff and figure out, is Apple stock undervalued or overvalued? And the price where it's currently trading it at in the market is considered fair value. That's where supply and demand meet. So obviously, sports betting markets are in general pretty efficient, but there are still inefficiencies you can exploit. I don't mean to say that in a way that you can't make money. All I'm saying is saying, hey, it's going to be snowing in Buffalo, so I'm going to bet the under in the game because it's bad weather. There probably won't be as many points. That is horrible reasoning. That is horrible logic. Sportsbooks know what the weather is going to be. So do other sports bettors. Similarly, saying, hey, Jamar Chase has scored a touchdown in his past 3 games, so I'm going to bet on him to score a touchdown tonight. That's not good logic. Sportsbooks know what Lamar Jackson, as well as other sports bettors, did the previous 3 nights. So you can absolutely make money sports betting, but the very surface level strategies, like looking at last 5 graphs, how has a player performed in the last 5 games, that does not work, right? That is not a strategy that is going to work long term. The same way, looking at what a stock price did over the past month isn't going to tell you what it's going to do in the future. So without further ado, let's get into some specific trading strategies that also work in sports betting and make me money. So the first quantitative trading strategy I learned while I was working in trading is called arbitrage. And it's basically when you can buy something, the exact same asset is priced differently in 2 different places, right? So the same way you can place a bet on, the Dodgers to win the World Series on a ton of different sports books, you can buy and sell assets different places, right? Like stocks, stock options, complex financial products. So basically what arbitrage is when the exact same thing has different prices 2 places, and you can buy low, sell high to guarantee a risk-free profit. For example, you can buy a stock at $1, sell it at $1.01 on another platform and make that 1 cent a profit. Obviously, 1 cent isn't super compelling, but at these quant trading firms, they're doing hundreds of millions of trades every single day, so it really adds up. I mean, when I was a quantitative trader, I was making tens of thousands of trades every single day. Every trade has a small edge, and over the course of the long run, over the course of a large amount of trades, it really adds up. And it's the same thing in sports betting. So I said earlier, all sportsbooks set their own unique odds. So arbitrage, here's an example I gave out on Twitter for free. I give out basically, all my plays 100% for free. I'm always live streaming on Twitch or giving out plays on Twitter. But you can see 2 sportsbooks, Rebet and FanDuel, had super different odds on Baker Mayfield to go over 2.5 passing touchdowns. Rebet had his over priced at plus 118, and FanDuel was way different at plus 200. So that's like seeing a stock at $118 on Fidelity, $200 on E-Trade. It doesn't really make any sense. So what you could do is bet the over on FanDuel, bet his over 2.5 passing touchdowns. Then you could hedge or sell Baker Mayfield, bet his under 2.5 passing touchdowns on rebet, and guarantee a risk-free profit. So that's exactly what I did. If you're confused, why did you bet that exact amount of money? One of the sportsbooks limited me to a max bet size. You know, sports betting markets are not as liquid or efficient as the stock market. You're not going to be able to place $1 million, $2 million bets. So you can see the math on the screen here. If Baker Mayfield went over or under, it didn't matter. I'm fully hedged. This is a risk-free strategy. Regardless of the result, he could have 5 passing touchdowns or get injured the first play. It doesn't matter. Right when the game ends, I make a risk-free profit of over $30. Obviously, you may say, cool, you made $30. But what you're missing is if you do this over and over and over, you're typically arbitrage betting on games that day, right? You're not arbitrage betting in general games years away. So if I place 20 arbitrage bets in a day, they're all making $30 in profit. I'm getting my money back. It is daily compounding, which is why your bankroll can grow quickly. So 20 arbitrage bets a day for $30 profit. Every single day, my net profit in my account is growing by $600.
So you telling me,
bro, it's crazy. It's crazy. I swear to God.
So I've made tutorial videos on arbitrage betting. You can see a thumbnail here. I'll also link to it. I definitely recommend watching it. I think it's a great strategy for all new sports bettors to start with because, again, first of all, you're going to make risk-free money. What's better than that? You will grow your confidence in your ability to beat the books before you move on to maybe other more complicated strategies that have variance, right? Some ups and downs. I think it's good to have a month where you just make $1,000, $2,000 in risk-free profit. You learn about sports books, stuff like that. And then from that point onwards, you're going to be like, wow, I can really beat the sports books. This arbitrage thing works. Maybe I'll try other strategies like positive EV betting or middle betting. So next, as a quantitative trader, you're constantly working in and out of positions, right? You can't just have $1 billion of risk on some stock. If the stock goes up 10%, you bankrupt the firm. That's not how it works. You're always looking to buy low and sell high. You're always looking to trade in and out of positions. Maybe I'll buy this asset and then I'll kind of, sell this as a little bit of a hedge. And it's the same thing in sports betting. So many sports bettors just think about their plays in terms of I'm betting an over or I'm betting an under, but that's not the right way to think about it, right? You should be thinking about what line am I getting? Why is the over in this specific case a bet with an edge? Your logic can't just be, I love Jamar Chase. He's really good, so I'm going to bet his over. Everyone knows he's really good. That's priced into the market. So that kind of led me, this trading mindset of working in and out of positions, managing risk, constantly having to evaluate what happens if this stock goes up 10%, how much money do I lose? Constantly evaluating risk led me to middle betting. So middle betting is a strategy where basically, just like all sportsbooks set their own odds, it's somewhat similar to arbitrage. Middle betting is when books have different lines from one another. So as a simple example, Jackson Smith, I found a massive discrepancy using OddsJam. Fliff had his line at 70.5 receiving yards. FanDuel had him at 81.5. So what do you think I did? I bet the over 70.5, the under 81.5. It's an 11-yard discrepancy around where his line is centered, where he's most likely to land. And basically, if he had in that 11-yard gap between 71 and 81 receiving yards, which is exactly what happened, I would win both bets. So middle betting is a very hedged or a very low-risk strategy because you always know you're going to win at least one of your bets. You're going to win your over, or you're going to win your under. However, you have the possibility of cashing both bets if the player falls within a narrow range, which is why I often call middles like the low risk, lottery tickets of sports betting. You know, they don't cost a lot of money, or you can do them for a profit sometimes. Sometimes there's arbitrage bets where you can make a risk-free profit that are also middles. But in general, it's an extremely low-risk strategy. You're day trading discrepancies between sportsbooks, and I absolutely love this strategy. Again, if you're betting a player's over, what line are you taking, right? Like, you are constantly, as a sports bettor, trying to trade in and out of positions, get good value. So the next strategy is value betting. As a trader, you're constantly thinking about fair value in getting trades that are plus EV, that have an edge. So for example, if I think a stock is worth $10 and I'm able to buy it at $9, I want to do that. That trade has a dollar in edge. It's the same thing as a sports bettor. Everything revolves around price, right? Everything revolves around price. There's no such thing as a lock or a guaranteed win. Everything is about getting an edge and winning long term, right? Having a long-term focus. So for example, I just bet the Patriots plus 360 against the Bills. This is a play for Sunday Night Football, the week I'm recording this video. And you can see, if you look at the odds on all these other sports books, Fliff was offering really good value at plus 360. All these other books had the Patriots priced around plus 300. So what you can do is you can remove the VIG from the sports books and essentially calculate what do you think is fair value. So Fliff had the Patriots plus 360, and no VIG, a very sharp book, had the Bills at minus 359. So this was an arbitrage opportunity. You can't have plus 360 betting 100 to win 360 on one team and then 359 to win 100 on the opposite team, right? The market is crossed. One of these two bets has to be profitable. And again, Fliff is a very soft, easy to beat sports book. If you go back to that picture of my net profit by book, I'm up like 100 grand on it, maybe even more. So Fliff, a very soft, easily beatable book, was crossed or arbitrage with no VIG, a very sharp betting exchange. One of the two bets has to be profitable. It already looked like Fliff was offering good value if I looked at the other data points in the market, right? The other sportsbook setting lines. So long story short, I kind of realized this is an incredible play at plus 360, and I locked it in. Value betting is something obviously very similar to trading. Every single trade just means you're getting value to relative, to what you think is fair. So for example, if you think a stock is worth $10 and you can sell it at $11, that's a great trade. If a client wants to buy something from you at $9 that you think is worth $10, you don't do the trade. Everything is about fair value. Every team has a price. Obviously, the Bills may be the best team in the NFL, and they're the favored team. They may win this game, but this is still a bet with an edge. So other things I learned that are a little bit softer skills, but as a trader, is discipline, right? As well as just risk management. So constantly, as a trader, you're thinking about risk management. If this goes up this much, how much money could I lose? And it's the same thing as a sports bettor. Understanding bankroll management is critical. I recommend, if you're starting out, using the Kelly criterion. I've made some videos on it. And you also just learn emotional discipline. Like, I was a trader for years. There were days I lost $5 million and days I made a ton of money. You know what I mean? Like, you are going to have ups and you are going to have downs. You need to have a long-term focus. So even in August, which was one of my best months sports betting this year, I made over $50,000. I still had days where I went down $5,000, right? So I don't go crazy. I don't start betting everything the next day even bigger. I stay very rational. I understand that it's a part of the process. And if you have an edge, you are going to win long-term. Next, you have diversification. So as a trader, this kind of relates to risk management. You don't want to have all your eggs in one basket. Like, as a quantitative trader, I was making quite literally tens of thousands of trades every single day. Every trade has a small edge, a few cents, a few dollars, hundreds of dollars, and basically it adds up, right? Of course, you're going to lose money on some trades. You're going to get screwed on some trades. On other trades, you're going to make a ton of money. But if you have an edge due to the law of large numbers, you will make money long term. It's kind of like flipping a coin that's 60% to show up on heads. It may show up tails a few times in a row, but over 100,000 flips, it's going to show up on heads more often. That's a statistical, basically guarantee. So it's the same thing as a sports bettor. I know I'm going to have some lucky wins. I'm going to have some bad beats. I don't let it bother me. I know I'm going to have some losing days. I know I'm going to have some bets for $10,000 where the team makes 3 errors in the 9th inning and they blow my bet. And yes, that's something that has happened to me. It's not fun, but I recognize that this happens to everyone. Bad beats, lucky wins. It's part of the game. And if you have an edge in sports betting, you are literally mathematically guaranteed to win long term. So having a long-term focus, in my opinion, is critical as a sports bettor. Regardless, we covered a lot in this video about the relationships between trading and sports betting, trading strategies that I now use as a sports bettor to consistently make profits. But if you want to learn more, check out this video. I cover every single NFL betting strategy I use to beat the books in a lot more detail. Obviously, this video, I didn't want to make it 3 hours long, so I didn't go super deep into the variety of different strategies I use. But check out this video. Let me know any questions. Comment any other video ideas as well. I love making sports betting content, so let me know any other video ideas you guys have. Have a great rest of your day, guys.